Toronto home prices just hit their lowest level since 2020. Sales just fell to a 30-year low. And yet, right now in this market, there's a window of opportunity that most people in the city are sleeping on. If you own a condo, a semi, or a townhouse, or if you've just been waiting on the sidelines for the right time to buy, the next 60 seconds could literally change the financial decision that you make this year. Stay with me, because the numbers I'm about to break down, they tell a story that nobody's talking about. If you don't know me, my name is O'Dane Harding. I'm an award-winning real estate agent here in Toronto. And every month I sit down and I go through the actual data, the real numbers, so you don't have to go through all the nasty numbers on your own. Today, we're breaking down the February 2026 GTA Housing Market Report put together by Urbanation Royal LePage. And I promise you, there's some genuinely eye-opening stuff in here. Whether you're a buyer, seller, you own a condo, or a detached house, or even if you're wondering if now is the right time to make a move. Let's get into it. And quick thing before we dive in. If anything I cover today sparks any questions or curiosity for your specific situation, your property, your neighborhood, your finances, I want you to book a call with me. Link is right in the description. It's free, no pressure, just a straight conversation. I do this every day, and I love helping people cut through the noise and confusion and figure out what the right move for them actually is. So, February 2026, let me paint the picture for you. Total MLS sales across the entire Greater Toronto Area came in at 3,868 transactions. That is the lowest February we've seen in 30 years. Let that sink in for a second. In more than 3 decades, February has never been this quiet. And I'm not even getting into the fact that we've had so many more people come to the city and live here. Now, compared to just last year, sales dropped 6%. But compared to the 10-year average, we're sitting at 42% below normal. And if you go back to the market high in February of 2021, sales have fallen 66% from the peak. The seasonal bump that we usually see between January and February, that normal uptick in activity, that even came in below average, which tells us the slowdown isn't just about weather or the time of year. Underlying demand is genuinely soft right now. So why is that? 2 things: certainty and wait and see. Between the ongoing trade conflict with the United States and the war involving Iran that broke out at the end of February, consumers are rattled. Bond yields jumped 30 basis points in the first week after that conflict began. And when bond yields go up, fixed rates go up. Oil spiked over 40%, the stock market dipped, and the Bank of Canada, they're expected to hold rates while they assess the situation, which means buyers are not getting any relief in the near term. And all of that is pushing people to the sidelines. Sellers too. Here's where it gets interesting, because yes, buyers pulled back, but what we haven't seen in a long time is that sellers are pulling back too. New listings in February dropped 18% compared to a year ago. And for the first time in 17 years, new listings actually fell from January to February instead of that number rising. And that is a meaningful shift. Here's why it matters. That drop in new supply dropped 3 times faster than the drop in sales. So for the first time in 3 years, active listings actually declined year over year. Now, I don't want to oversell this. At 19,314 active listings, we're still sitting at near record inventory levels. We're still 72% above the 10-year average, and the sales to new listings ratio is only at 36%, which is still below the balanced range of between 45 and 60%. Months of supply is sitting at 5, which is more than double the 10-year average at 2.1. So make no mistake, this is still a buyer's market, but I want you to hear this. The inventory is starting to move in the right direction for the first time in a very long time. If this trend continues over the next few months, we could be looking at a price floor, or maybe even the beginning of the bottom. That's what the data is starting to whisper. Now let's talk prices, because this is where it gets real for a lot of people. The average GTA home price for February of 2026 was $1,008,968. That's down 7.1% from last year, the 13th consecutive month of annual price declines. And compared to the all-time peak of $1,339,084 back in February of 2022, we've dropped 24.7%. Call it roughly $250,000 cut off the top on average. Now, 10-year average annual growth is still sitting at 5%. So the long game in Toronto real estate has still rewarded the patient owners. But short term, prices haven't gone anywhere in 5 years. And depending on your property type and the area, the pain has been real. Let's break it down by housing type, because this is where the story gets really, really important. All right, so this is the part I really want you to pay attention to, because this is the insight that I think represents the most significant, time-sensitive opportunity in the market right now, and most people are missing it completely. Here are the average prices by housing type as of February 2026. Detached homes, $1,325,654, down 8% from last year. Semi-detached rows and towns, $904,170, down 7%. Condo apartments, $626,650, down 9%. Now, here's the thing I want you to think about. If you own a condo right now, you're probably frustrated. Condo prices are at their lowest price point since February of 2019, down 9% year over year, down 22% from the peak. It feels like a tough spot to be in, but here's the flip side to that coin. The price gap between a condo and a semi, a row, or a townhouse has also compressed. The spread between a condo at $626,000 and a semi, row, or town at $904,000 is roughly $278,000. That gap has tightened as all prices have corrected. And the spread between a semi, row, or a town at $904,000 and a detached at $1,325,000, that's about $421,000. Here's why that matters in plain English. The relative cost of moving up the property ladder is more manageable right now than it's been in years. If you bought your condo a few years ago and you're sitting on some equity, what it actually costs you to step up into a semi, row, or a town has narrowed. And the delta from a semi into a detached has also come down. Meanwhile, supply tells us that semis, rows, and towns are actually the most balanced segment in this entire market right now. 3.8 months of supply, which is in the balanced range of roughly 3 to 4 months, especially in Toronto East, where months of supply for that segment is sitting just around 3 months. Toronto West is at 3.7 months. The report specifically flags that detached semi-row towns in the city of Toronto are poised for at least some modest price growth in the months ahead, direct from the data. So let me say that again in plain language. The segment that you're potentially moving into, semis, rows, towns, and detached in Toronto, may be near its price floor. The segment you're potentially selling from, condos, is still correcting, but the price gap between them has compressed, which means the relative trade-up cost is lower than it's been in a very long time. If you've been thinking about a move up, this is the window that you at least want to have a conversation about. Because if supply continues to drop and prices in the low-rise segment start to recover, and the data suggests they might, that window will narrow. Now, let me spend a moment on condos specifically, because if you own one, you deserve a straight answer. The condo market is genuinely challenged right now. Months of supply sitting at 6.6 months, the highest February reading in over 30 years. That's well above the balanced threshold of 4 months. And inventory, while it did drop 8% year over year, the biggest decline in 4 years is still elevated. Here's what's interesting though. New condo listings have been falling consecutively for 6 months. That trend is meaningful. As new construction completions wind down from their record highs, the supply pressure should ease. And buyers are very active at the entry level point. Condos under $500,000 surged 90% in sales volume year over year. Condos under $400,000 more than tripled. So the bottom of the condo market is being established in real time. Entry level is finding its footing. Everything above $500,000 saw sales decline, but the foundation is being laid. The report suggests that condo prices could stabilize later in 2026 if supply pressures ease. If you're a condo investor or owner thinking long-term, this is worth understanding clearly. And just quickly, because location always matters, let me give you a few highlights from the area-to-area breakdown. Peel Region was actually one of the brighter spots for detached sales, up 14% year over year. Halton was up 6%. The city of Toronto was up 4%. York Region and Durham Region saw significant declines, down 14 and 17% in detached sales respectively. In terms of price, the most affordable detached market in the entire GTA is Durham Region, at an average of $959,864. The most expensive detached in the city, Toronto Central, averaging $2.197 million. That's down roughly 22% compared to last year, which is a massive correction. And for condos, if you're a buyer, the tightest inventory, meaning the most competitive condo market, is Central Toronto at 6 months. The loosest, that's Halton Region at 8.6 months. And Peel at 7.7 months, which means the most buyer-friendly condo markets right now are in the suburbs. Whew, that was a lot. February 2026 is telling us a few very important things. Sales are at historic lows. Prices are down nearly 25% from their peak, but supply is, for the first time in a very long time, starting to pull back. The move-up window is open. Low-rise Toronto may be near a price floor, and the condo market, while it's still challenged, is beginning to show early signs of stabilization. If you're a buyer and you're trying to figure out if now is the right time, a condo owner wondering if it makes sense to move up, or a seller trying to understand how to price and position your home in this environment, the answer depends entirely on your individual situation. The data gives us context, but your specific equity position, your neighborhood, your timeline, your goals, that's what drives the right strategy. And that's exactly what I do. I sit down with people, have real conversations, no fluff, and we figure out together what the smartest move for them is. Whether it's buying, selling, holding, or doing absolutely nothing for now. All of those can be the right answer depending on your circumstances. If you want to have that conversation, book a call with me. The link is right below this video, and you'll actually leave with clarity. And if you got value from this video, hit the like button, subscribe, and share this video with someone in your life who's been wondering what the heck is going on with the Toronto real estate market. Because clearly, a lot's going on. I'm O'Dane Harding, and I'll see you in the next one.